well, and also how are experts really viewing the market setup right now and the strategies that they are advising to you as investors for both intraday traders, short-term traders, and also the long-term investors as well. We continuously are getting you the expert views through the day, and even on this show we'll be joined by an expert. But first up, a quick check on how the markets are doing at this point. Well, we are seeing that uptick continuing, about 0.25% of an uptick for both the benchmarks, Sensex and the Nifty. 18,060 right now for the Nifty 50. It's up about 43 odd points. The Sensex hovering at 61,411 odd levels, 136 points up right now, about that 0.2% of an uptick. The broader markets doing better. Since the morning, we've been seeing the mid and the small cap sector, especially the small cap space, really performing after that lull of the last 2 or 3 odd sessions. That's the one that has been leading the way. Let's look at how some of those are also moving at this point in time. Well, in terms of the sectoral action also, if I can tell you, the leading action comes from the IT pack that has been in limelight for the last many sessions now. And today also 1.7% uptick for that IT space. The metals pack has really shown that bounce today, 1.3% uptick for that one. The realty space has also seen a jump. 1.5% uptick for the realty pack as well right here. But what's not contributing to the markets overall is the Nifty Bank, the autos, financial services, and slight dip that you're looking at in the PSU bank space as well. But other than that, it's a mixed kind of cue when you talk about the markets overall. In terms of the market breadth, though, the favors are towards the advances today, 32 advances to 18 declines. The gainers also, a whole host of them are reacting to their numbers as well. The top 5 gainers on the Nifty pack include Tech Mahindra, ONGC, Apollo Hospitals after those earnings, second day in a row, the continuous move that we are seeing on the top. Nestle, of course, after that strong show in Q4, up by 2%. Divis Laboratories has seen a jump as well, 1.9% uptick for that one too. On the laggards front, you do see some declines coming in on BPCL, HUL, HDFC Life, Eicher Motors. After that continuous run-up, you are seeing some profits being taken off the table, and Bajaj Finance as well. Time now to welcome our guest for the day. Mr. G Chokkalingam joins in. He's the founder of Equinomics. Welcome, sir, and thank you so much for taking the time out for this discussion. First up, I wanted to take your view on the markets. We've been seeing a range-bound trade in the markets for almost like 8 to 10 odd weeks in the market so far. But finally, this bounce is coming up after the Adani Group stocks and the kind of chaos that we've been seeing over the last 2 weeks or so. Finally, do you see some sense that the markets will be returning to their own trajectory, focusing on bigger triggers, those that matter to them? And finally, we will may be able to see the Nifty inching towards the record levels again.
Certainly, yes. I firmly believe that by June, July, the Indian market should rise 5 to 8%. After that, it depends on the 7 state elections and oil price. Otherwise, I am quite optimistic about the market in the short term. And we have seen off late in the last few days, the rest of the stocks are getting disconnected from Adani group of stocks.
Yeah.
When some fell also in that group, the market was quite robust. So that's one positive development. And second, I've been saying that Indian economy is quite robust. Even after the revision of GDP downward, still India would be the fastest growing. And yes, exports are decelerating, but the comforting factor is that service export is growing at around 30%. So the trade deficit overall is the least. And then you have, NRI remittances, banking credit growth, food crop, both Kharif and Rabi, they are very robust. So there are a lot of positive developments. And market, though the Sensex is near record level and falls short only 4-5%, but the market cap of a broader market has fallen substantially. So there is a scope for recovery, and I firmly believe that this recovery would continue till June, July. After that, one has to see how oil price or how the political uncertainty evolves in the country.
Right. So which all the sectors or themes that may participate in this recovery in the markets up to June or July that you're talking about, which are the sectors that you're most bullish on currently?
Yeah, 3 segments. One is the IT sector, second, the banks, and third, a select small and mid cap stocks. Now, IT sector, why? I mean, they got hammered because of the employee cost, but we saw in December quarter, employee cost improving. I mean, for the companies, the stress is coming down and the attrition also came down. And second, the bank, because the credit growth is still at a record high level, above 15%, which is almost a decade high. And third, the small caps, quality stocks would do well, because if you look at the B group shares, combined market cap, it is down almost 35% from the last year peak, and even quality stocks got butchered by 30-40%. So that is a space because historically also after a major meltdown, once in 3 years they recover and give you very good opportunity for wealth creation. So therefore, these are the three segments I'm very optimistic.
Right. So let us talk a little bit more on the IT pack. It is certainly one of the best performing sectors so far this year. Complete reversal is what you can say from the last year's underperformance, which was not really expected in the first half. Most of the experts that I was talking to in the initial part of January did believe that it will take some time. Perhaps in the second half is when we will see the IT stocks really coming back. But perhaps this recovery is happening earlier than expected. Is it time to now take a fresh view on some of the large caps or the mid caps? Where exactly would you advise investors to position themselves in the IT pack right now?
It should be combination of both the large and mid. Definitely, as you asked, I think it is a right time. I may be wrong, but I believe that it is the ideal time to go a little aggressive in the IT space because many stocks are still down anywhere 30 to 40% from the peak.
Sure.
The valuations still remain attractive. And third, pre-pandemic period, we saw almost 4 or 5 acquisition in the IT space. We have seen, starting from 14, 15, Polaris, Hexaware, Emphasis, Mindtree, so many companies were taken over. But after pandemic, there is a lull in merger and acquisition activity. I firmly believe that that would again get the boost because there is a competition for fourth and fifth rank in the top, IT stocks. L&T Infotech also aspiring to become fourth. So there will be a lot of competition to improve the ranking in the country. And not only that, the whole industry is growing at 4 to 6% in dollar terms, the IT revenue, IT exports. And therefore, there is a limit for organic growth. On the other hand, these companies are sitting on huge cash. So put together, I believe that there will be opportunity in the mid-cap IT space in terms of more acquisition. So one should look at mid-cap, small-cap stocks which are, cash rich, which are trading at, anywhere around 14, 15 PE, and also enterprise value to annual IT revenue is around 1.5 times. So these are the parameters I have used, and in the past I was quite lucky to identify a few
Right.
in advance. So this should be the criteria to identify mid-cap IT stocks.
Okay, understood that as well. What about the earnings? How did you really look at the earnings that were reported from the IT pack this time around? And what does it suggest, the commentary and the guidance going forward from here?
Yeah, if you talk about the revenue, yes, it is not that optimistic. I don't think it is in the hands of Indian IT exporters to get back to double-digit growth in terms of dollar revenue. But certainly on the bottom line, there is a lot of visibility. In December quarter as compared to September quarter, we saw the attrition rate has come down, and even the year-on-year jump in the employee cost as compared to September quarter, in December quarter, it got moderated. Going forward, the rupee also depreciated about 10% in the last 1 year. Yes, very interesting. As a student of economics, it's a surprise to note that in the last 1 decade, the currency depreciation is not helping on the exports, improving the export. But still, I am bullish this time because IT companies are getting margin squeezed because of the rise in the employee cost. So under the pretext of this employee cost rise, they would be able to get the benefit of rupee depreciation from the
Yeah.
vendors. So therefore, I believe going forward, Q4 and Q1 of next financial year, you will see good improvement in the bottom line for majority of the IT companies.
Okay, would you be comfortable sharing some of the names that you may be bullish on from the IT pack, like from large caps and mid caps?
Yes, one name is Oracle Finance. It is trading, almost around 14, 15 PE. Surprising, MNC stock, 5 to 6% dividend yield. It's IT product company, and the Indian company is trading at 25, 30 PE, whereas this is only around 14, 15 PE. And historically, Oracle Finance, that is OFS, has always given enormous return to the shareholders. Every time it was beaten down. The second name is Cyient, and personally also we have invested. I want to disclose that. I am extremely bullish on this company because it is one of the cheapest mid-cap IT stocks.
Yeah.
And promoter holding is also similar to Mindtree. They hold only around 24%. And, they are very good in engineering segment, and also they hived off their electronic division into separate company that is going for IPO.
Yeah.
And the management for the first time given a guidance of 60 rupees EPS for next year. So on that basis, it is one of the cheapest stock. I am not forecasting Cyient would be taken over, but I am pretty confident that one or two acquisitions will happen in the industry. If that happens, company like Cyient can get re-rated. So
Yeah.
therefore, I am extremely bullish on Cyient.
All right, understood that. So that was all about the IT space. You've got a complete and breakdown of what exactly can you expect going forward from here in terms of the movement of the IT stocks, the triggers that will impact, and the stocks that are being preferred by Mr. Chokkalingam as well. Let's now move on to the other defensive pack, and I wanted to talk on the FMCG space as well. Especially in the last few trading sessions, we've been seeing on and off some bounce in some of the stocks. Even today, like we saw Nestle performing well on the back of the earnings that have come about. Q4 show was definitely good right there, about profits rising by 66 odd %, and perhaps this is being seen as the best growth in the last decade being seen for Nestle as well. 75 rupees of a dividend has also been announced right there. Overall for the FMCG pack and for Nestle, what would your thoughts be?
Nestle, we have recently given a sell call. I believe that there is not much scope for upside. Of course, for the long-term investor, Nestle is always a hold. It's one of the best defensive. But to create, to beat the market, I believe HUL would be better bet. Okay. And also 3M India. I believe that retail investors should have some exposure to FMCG stocks because historically it is always proven that till the rate cycle is complete, the FMCG sector remains most outperforming sector in India. It's highly inversely related to what is happening in the US. When the rate keeps rising there, and this becomes a very defensive, and it rewards the investors. And secondly, also, we don't know about, the political uncertainty or uncertainty coming oil or war. So therefore, it's a best segment to be in, at least till the general elections are over in May 2024.
Okay. And overall, on the traditional FMCG basket, do you think there is scope enough for investors to now look at these companies, our everyday use companies of, soaps, shampoos, those companies that sell all of these, and not the discretionaries, because perhaps there'll be a recession, perhaps there'll be a slowdown. Those may get impacted, but people will not stop using the soaps and the daily essentials right there. Do you think there is time enough to now look at FMCG as a fresh view?
Definitely, yes. But it would be misleading to say that you can create a lot of wealth in the next 1 year from FMCG, because the valuations are highly stretched, and they have also rallied to some extent from their bottom. So definitely, if anybody is looking for enormous wealth creation, don't look at FMCG right now.
Yeah.
If you are looking at protecting your portfolio, I think this will be the proper research strategy to have decent exposure to FMCG sector as a whole.
Sure. Since you also talked about those two other themes, I would want you to also speak about some of the names that you're bullish on from those themes, banks and then the small caps as well, starting with banks.
South Indian Bank, if anybody is losing money, one can hold it. But otherwise, I would prefer, large bank like HDFC Bank.
Okay. And what about the small cap space?
Small cap space, maybe one can relook at Bank of Maharashtra. It has come down from almost 37 rupees to 27, and trading at 1.1 time price to adjusted book value, whereas it maintains nearly 30% growth in the profit, and the credit growth also outperforming the industry growth by big margin.
Okay.
So that one can consider at around 27 or less than 27.
All right. Well, thank you so much, Mr. Chokkalingam, for being with us on the show and sharing all these, insights about various pockets that we've discussed, IT, FMCG, and the other themes like banks and small caps as well that you've discussed with us today. And we shall continue to discuss more about markets going forward with you as well. Right now, as we look at the markets, they've completely flattened out. All those gains since the morning, they're largely wiped out. The Sensex has now slipped into the red. So look into that as well. Most of these major indices. So Nifty is trading at 18,024, down, up about just about 8 odd points. The Sensex is hovering near that flat line, about 1 to 2 points up, but absolutely has flattened out. We were seeing 150, 250 move, 250 point move by half time or so, but all of those gains have been wiped out as well. let's take a look at, where is the sell-off really coming in from for the market. So the pressure is really emerging when you talk about the sectors. You do see the Nifty bank down in the red. The autos have slipped into the red. Financial services, FMCG has now come back into the red as well. PSU banks, private banks also lagging behind. The only solace being in the IT space, that's still up by 1.5%, although that's also come off the peak of the day. Metals are up by 1.15%. Realty space holding up strong, 1.3% uptick for that one. But you can see that slight dip that's come off from the day's high point that we started off the show with at around 3 o'clock. So you can see that dip coming about. Metals still picking up pace even at this point after that initial dip. But we'll have to keep an eye out on the market breadth is now divided. Earlier it was skewed towards the advances. It's now 25-25 when you talk about the Nifty 50 stocks as well. So keep an eye. We are just about 9 or 10 minutes away from the closing, and we are seeing some profits being taken off the table already after that sharp move that we've seen through the trading session. Do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Many thanks.
All right, Alok Bajpai from Mexico joins us for a quick chat at the UP Investor Summit. Alok, thank you so much for joining us. Tell us about how UP is a big state for attracting tourists, and how any number you could give us with respect to payments or bookings from your on your portal.
Sure. So UP is actually the largest source for our user base, right? Like if I tell you the numbers, we do about 150 million users a year, and UP is contributing between 15 and 20% of that. Lucknow is actually the number one city from which we get users every single day. And I think some of it has to do with obviously how much deep we are on the train side of the business and bus, because most of tier 2, 3, 4 cities in UP are connected largely by train and bus. But it's also about the growing share of wallet that we are seeing from customers in UP. Today, on an annual basis, we are doing about 8,000 crores of ticket bookings, and we want to grow that almost 2x in the next 2 years. And more than 10% of that should actually come from Uttar Pradesh, right? So we are expecting close to $200 million of worth of bookings to start coming from Uttar Pradesh in a year. And the potential is there because if you look at digital penetration, UPI penetration, and the fact that travel is bouncing back, लास्ट के एक साल में आप देख रहे हैं कि लोगों की फ्रीक्वेंसी बढ़ गई है. People are taking more trips, they're spending more, share of wallet of travel and tourism is going up, and we are benefiting from all those trends, and Uttar Pradesh is benefiting the most from all those trends because we have the top religious sites for Hinduism, the top religious sites for Buddhism, and we also have some of the best landscapes and unexplored towns, and the oldest town in the world, in fact, right, Varanasi. So these assets, I think, are helping us drive more tourism into this market, and also we have seen UP has emerged as one of those cities where we are seeing a transition from people who used to take train, have started looking at taking a flight. Connectivity has improved. There are more airports. In fact, 2 big new airports are coming up. One in Ayodhya, of course, the biggest one in Jewar, which will be the largest airport in Asia. With these developments, we expect UP to become the epicenter for travel and tourism growth in the country.
Right. Look, I'll also ask you about how the company is doing with respect to bookings. Now the travel is back to its pre-pandemic levels. How are you anticipating the growth of the industry now?
Yeah, so, fortunately for us, because we were focused on the next billion user market, the tier 2, 3, 4 market, and largely around trains and bus and obviously Udan routes for flights, the growth in these areas has been phenomenal, right? So today, Ixigo is at close to 5 times of our pre-COVID scale by virtue of focusing on this segment. And I think a large part of that is also attributable to the fact that, look, we've been very focused on customer experience. We have processed refunds on time during COVID. Last 2-3 years, the industry has struggled with cancellation, rescheduled refunds, and we solved those problems, made them automated. We've also tapped the opportunity of the new sectors that Udan scheme has brought up. In fact, we've spent a lot of time and energy to figure out how we could look at converting some of the people who don't find a train, who are waitlisted on a train, right? How do we put them on a bus or a flight, right? How can we find those alternates very easily? And by virtue of that, we've seen our traffic and our bookings grow phenomenally.
Right. I was speaking to some hotel experts, tourism experts as well. Hotel occupancy rate is close to about 90%, again at the pre-pandemic levels. Tell us about any interesting trend at Ixigo that you must have highlighted or seen with respect to bookings or travel. Could you share some of that, please?
Sure. So, we are seeing a bounce back which is unprecedented, right, coming out of COVID. But the issue now is on the supply side, right? Like if you look at the air capacity, most of the airlines are running at 90% plus occupancy. Hotels are running at 90% plus occupancy. And I think the supply addition hasn't kept up pace because the industry has been a little cautious in terms of adding capacity. And hotel side, obviously, the capacity addition will take more time. But the interesting trend there is the prices are much higher today. Both on the air side and the hotel side, prices are up by between 25% to 40% depending on the sector or the destination. Despite that, you are seeing air is back to pre-COVID levels already, despite paying higher fares. Hotel, very hard to find a room on over a weekend at any leisure destination in the country today. I think these are green shoots for what is yet to come. We will see an unprecedented continued